Hello from the heart of London, where over the course of the next hour we'll be joined by an expert panel of guests. They'll be exploring the opportunities that could lie ahead for us this year. So we'll be hearing fascinating insights, getting practical tips and all the details to help you make informed decisions for you and your family's future. It's a new year, so it's time to look ahead, make plans and embrace what's next with confidence. Hello and a very warm welcome. I'm your host, Daisy McAndrew, and I'm thrilled to be with you for the Nedbank Private Wealth Investment and Wealth Insight Report. Now today we'll be diving into some of the key areas when it comes to making the most of the investment and wealth opportunities that may be ahead. If you've registered and are watching on our virtual event platform, you'll have the opportunity to put questions to our experts throughout the show using the chat box, and we'll get to as many as we can during the show. Welcome also to those of you who are joining us via LinkedIn and YouTube. All right, well, let's get started with a closer look at what we have in store for you today. Starting with property, Katie Warwick from real estate expert Savills will be taking us through trends in the UK property market. Then her colleague Kelsey Sellers will also share an update on what's going on in the global property market. Katie and I will then be joined in the studio by Nedbank Private Wealth Senior Credit Specialist Chirag Patel, who'll be explaining some of the lending options that are available and a few of the ways his team is helping clients buy their dream home. What if you fancy moving overseas? Well, Head of Private Banking for Nedbank Private Wealth in the Middle East, Andrew Bates, gives his thoughts on life in Dubai and what you need to know if you're planning on making the move there. Following that, Senior Wealth Planner Yash Naidu joins me to discuss the practicalities of relocation and how wealth planning is essential. We'll then move on to investments, and Ned Group Investments Portfolio Manager Madhushree Agarwal lets us know what investment trends her team is favouring and why. Then Chief Investment Officer Tom Caddick talks us through what he sees will be affecting investment markets in the first half of this year. But of course, there's no point in checking your financial health without ensuring your personal health is also taken care of. So Victoria Aspinall from Solace Health will be here discussing common health misconceptions, health trends and advancements in medical technology. And finally, all our guests will join me around the table for a discussion on everything we've covered, as well as any questions we haven't quite got to. So get those questions coming in throughout the show. All right, let's jump straight into the show with an update of property markets from real estate expert Savills. So whether you're looking for a stunning beachfront villa, who isn't, or a penthouse in the heart of a bustling city, the property market offers a wealth of investment opportunities and options. Joining me to discuss those options and the current trends in the UK property market is Katie Warwick. Katie, thank you so much for joining me today. Obviously, this is something that a lot of people are thinking about. What is going on in property? Are property prices going up? They're going down? This is your area. What are you seeing?
Thanks very much for having me. So in terms of the UK property market, and I think it's firstly important to distinguish which bit of the market we're talking about here, because they all operate quite differently and have very different drivers. But across the UK mainstream market, we've started to see a recovery already. It's very much in line with interest rates that have started to come down already, and that really opens up the affordability for the average buyer. And so there's a really strong link there. So that's the main driving factor across the mainstream markets. And actually at the end of last year, according to Nationwide, we saw just over 4% growth in the UK markets. That was ahead of what we were expecting. That was a little bit of a stronger recovery than we were expecting. In the prime markets, very different drivers. And of course, there's been a lot of talk and a lot of focus on the budget that we had in the autumn there. And some of those tax changes, most of them were preempted, but once they'd been confirmed, obviously that firstly, it ended that period of speculation where everyone was wondering what are these taxes that the Chancellor is going to be putting on those with the broadest shoulders, because that was the whole narrative through basically last year. So we now know what those tax changes are, and I think that really gives people the information they needed to be able to make the decisions, because all of these things are very personal decisions on how wealthy people structure their finances, and how, where they want to spend their money, and what their sort of global setup is. And so, it's very hard for us to look at to say with confidence how the markets will react to some of these changes. But we have, we're in quite a good place with a number of agents who are able to feed in the sentiment from their buyers to us, and we do surveys of our agents and indeed surveys of our clients to tell us, how have these particular tax changes impacted on your how certain you are that you want to buy this year. Do you still want to go ahead with your purchase? Has it impacted on your budget for what you're looking for your next property? So if these are the sort of testers that we put out in the market when we're looking at what happens to the prime markets.
Compiling those reports, really interesting, fascinating what you're saying there about how sometimes it's just once people know, then they've got the information, then they can actually go ahead. It doesn't necessarily follow that the market contracts. So that is a little bit of a sneak peek at the global figures. Let's hear from Kelsey now on what the report can tell us.
Hi, my name is Kelsey Sellers, and I am an Associate Director at Savills World Research, based here in London. Spanish cities saw the strongest capital value growth in 2024, with increases of just under 10% in Madrid and Barcelona for the year. This was supported by a continued surge in demand from both domestic and from international buyers. Across the 30 locations in our index, 70% of the cities that we tracked reported positive capital value growth for the year. Only London, Miami, and Hangzhou reported price falls of less than negative 2% in 2024, but the strong fundamentals of these local prime residential markets may indeed support capital value rises during 2025. Prime rental markets continue to outpace sales markets, but the gap between the two is narrowing. In 2024, rents grew by an average of 4.3% across the 30 cities in our index. The gap between the growth levels for capital values and for rents narrowed over 2024, and it's likely that as interest rates continue to decline in the near term, this gap will continue to shrink as potential buyers who had put their plans on hold return to the market. Rental markets outgrowing sales markets was also reflected in our yield data. Prime yields increased to 3.15% in 2024. Dubai continues to be a standout destination for prime residential property, with capital values increasing by almost 7% and rents growing by a record-breaking 24% over the course of 2024. Now, this is mainly due to population growth, as well as an influx of high net worth individuals and family offices to the UAE. With political and economic changes on the horizon globally, buyers and renters are taking a pragmatic and often cautious approach to their property decisions for the year ahead. As such, we anticipate a positive average global capital value increase of 1.6% in 2025. Now, this is lower than the average capital value growth of 2.2% that was recorded this past year. However, there is a degree of caution in this forecast, as the challenges that global residential markets faced last year have not yet abated. Now, certainty on interest rates, inflation, and policy will all be critical for maintaining that steady run of growth that property markets have seen in recent years.
Well, very interesting from Kelsey Sellers. Thank you to Kelsey. Now, you'll see that we've been joined by Nedbank Private Wealth Senior Credit Specialist Chirag Patel, who's been having a look at borrowing and the financial options available to high net worth clients. Welcome to you, Chirag. Really looking forward to hearing what you've got to say. Now, some interesting things to note there from the Global Residential Index. We're hearing about Dubai as a standout destination, for example. Katie, are we seeing a real exodus? Is that what you're seeing of high net worth individuals to Dubai?
I mean, that's certainly what's been reported in the press, and there's been some research that's been done by, not by us, but by Henley and Partners, who have looked at the sort of flows globally of where those high net worths are going, and certainly the UK is showing a net loss of high net worths. I think they estimated that around 10,000 high net worths left the UK last year, whereas Dubai was one of the beneficiaries and saw a plus there of around 7,000. So yeah, it's possible that some are going to Dubai, certainly as a result of some of the tax changes that we've seen here. London and indeed the UK is certainly not as straightforward. I would say there's a few hurdles for people to work through, and it's working through the detail of how it's going to impact them. Dubai is attractive on a number of levels. And it has seen around 7% growth, as Kelsey was saying. London, on the other hand, prime central London values in 2024 fell by 1.9%. So we're still seeing and feeling the effects of those budget announcements, those tax changes. And it's a sentiment-driven market. So, there's...
As ever.
Yeah, absolutely.
Yeah. Chirag, is that what you're hearing, what Katie was saying there? Is that the message that's coming through to you?
Yeah, so what we've heard from our clients and what we're seeing more and more of is inquiries of moving abroad. So we've seen a few that have moved to Dubai, but they're also moving to other hotspots. But what we've seen post-budget is the questions being asked, people considering relocating. But like Katie said, it's a slow process for some. They have to think about the wider wealth advice they receive, the tax advice they receive, and then obviously lifting up families and making that big move takes time. But we are being asked on a more regular basis, this is our plans, this is what we're thinking about. But it's a wide variety of destinations. We've recently had a client wanting to move to Australia.
Yeah.
So it's not only Dubai, but Dubai is a sought after destination.
We're definitely going to be talking about that a bit later. And tips if you are thinking about that, what you should be thinking about, what sort of advice you should be looking at. But Katie, I want to talk about who the buyers are at the moment. Has the profile of those individuals changed recently? Who are they? Where do they come from?
Yeah, so prime buyers in prime central London, it's sometimes quite hard to determine exactly how they want to use that property because, it will often be a second home or a home for occasional use. We're talking about the very top echelons of property here in top value bands. And, there are a wide range of reasons why people buy. We're seeing slightly less investment activity. I think that goes across all of the different markets over the last year in this time of incredible volatility. People, especially investors, don't like uncertainty and they will just hold and withdraw rather than take a punt on it. But for London, we've now seen that prices have adjusted 20% since their previous peak. So their previous peak was in 2014. So there is a possible sort of buying opportunity for when those investors want to come back into the market. But certainly at the moment, there's not a lot of investment purchasing.
And Chirag, have you seen any change in the demographic of the buyers?
Yeah, we've seen domestic buyers drop off over the last 2 years, and the data from Savills will probably suggest that as well. But being an international private bank, we've definitely seen an influx of expats either purchasing for family use, so students or children relocating over here. But we've also seen international buyers wanting to move here. Though fewer numbers, there's still some that want to come to the UK, whether it's employment purposes, whether it's for education. So we are seeing more of those. But that's expected in the times we're in. Last year was uncertain. We had global elections, we had the budget, but there's green shoots now. I think we are returning to some normality, but it will be a slow process to see the domestic pick up.
We find that different types of buyers tend to go for different properties. So across the second-hand market, it is still predominantly UK buyers. Around half of all of the buyers are from the UK. But then the next biggest group is Western Europeans. And then you have buyers from the US, whereas in the new build market, you still see a predominantly UK buyers, but there's a much higher proportion of international, and you see China, Pacific Asia, and the Middle East being your top other categories outside of UK.
And is there any point looking away from London at what's going on in property as far as international buyers or domestic buyers? Are there any hotspots that we should be aware of?
So outside of London, actually, it is those commutable areas, so around Surrey, Cobham, Weybridge, even Tunbridge Wells, that are seeing, I think they've been the outperformers in the last quarter, so they've seen stronger growth. While prime central London has been falling, they've actually seen slightly, nothing to get too excited about, but slightly more positive growth. And I think it is about people looking for, a bit more certainty. Maybe there's something there around the extra cost of VAT on private schools as well.
Yeah.
Thinking about, one of those other driving forces as to how people choose where they want to be. And it's also the upsizers who are moving in. They're also able to benefit from those reducing interest rates over time.
The newspapers tend to love stories about sort of Hollywood movie stars moving to the Cotswolds at the moment. Just property pages seem to be full of that. Is that a real thing that's going on, or do you think that's more to fill newspaper columns?
Oh, I don't know too much about the specifics on the Hollywood stars, but what I would say is that some of the areas that have seen a real boost post-pandemic, such as those real hotspots, coastal areas, that they saw a real boom after the pandemic, where everyone wanted a second home in the Cotswolds and other places like that. They're seeing that they're really feeling the pain now that there's additional stamp duty for second homes, and some of these other tax changes that will be impacting them. And also, maybe that moment has gone. People actually have realised that London, we're all pretty much working let's say 4 days a week mostly, and maybe it's not so, thinking about the commutable distance, it's not really working for them. So we're starting to see a little bit of an unwinding of those post-COVID trends.
Addressing that balance, very interesting.
Yeah.
Let's get our crystal balls out. What do we think's coming down the track this year?
Well, this is the third live event I've done, and every time I've got my crystal ball out and nothing's ever come to fruition. So
You're not selling yourself,
no,
Joe.
no. I think we're still in unpredictable times. The MPC's meeting today, if we see another base rate cut, will it improve sentiment in the market? I think we're over the worst. Okay, so the elections are over, the budget has been announced. I think this year, as Katie said, we are seeing more buyers. We're seeing more properties come on the market. We're seeing more transactions. The data suggests that Q4 last year was really, really positive. We saw the same within the bank. So I think it's looking better. Will we ever return to, the peak? I think it will take time. It will take time.
Katie, do you agree we're over the worst? That, as you said earlier, quite rightly, it is all about confidence. It's all about sentiment in any market, but particularly in property.
So for in the research team, we do forecasting, and for prime central London, we are expecting a 4% fall this year. And I think most of it is likely to be front loaded, so it'll be likely in the first half of this year. And I think the reason for that is that we need to see that adjustment. We are seeing the transactions, and we were talking about this. We actually also saw a bit of a peak in super prime transactions in December, which is really surprising, especially in light of all of the changes, the tax changes and the wider sentiment in the market.
What did you put that down to? Do you think, was that a sort of bottleneck from people sitting on their hands and then saying, actually, new year, we now know that what we want to do, we'll just get on with it?
There's no more speculation on what tax is going to be impacting them. They're able to work through what this means for them. And actually, if people have been looking around and they've found a property they like, and at this sort of level, the properties are so unique and special, if someone falls in love with it, they're able to afford it, they'll just want to commit. It's not a market that's restricted by affordability in the same way that those drivers affect the mainstream markets.
Absolutely. Yeah. Well, a lot of food for thought. Thank you both so much for kicking us off this afternoon. I'm really laying it out there, what's going on in the property market and what to expect in the property market. Well, perhaps all that talk has got you thinking about a move abroad. It's certainly something that's been grabbing the headlines lately, especially since the change of government in the UK, as we've just been discussing last year, and of course October's budget. Now, earlier on, we caught up with Nedbank's Private Wealth's Andrew Bates, who himself moved out to Dubai several years ago to explore what it's like relocating, how he finds life in Dubai for himself and his family, and what developments he's seeing out there.
Hi, my name is Andrew Bates. I'm the head of private banking for Nedbank Private Wealth, based here in Dubai in the UAE. I couldn't think or dream of being anywhere other than this, mainly because of the lifestyle that it affords, not just myself, but the family, from a security, safety point of view, the health services. Obviously, it's tax efficient. The weather's always optimal for doing things outdoors. So at this moment in time, we have no plans to leave this region. Some of the key things that have changed in recent years are obviously the infrastructure. If you look at the Dubai skyline, people who visited 1 year ago, 2 years ago, probably would have recognized it. Dubai has been building out to make an attractive place for people to come and visit, but also to come and stay. So the region have really gone one step further to making it an attractive place for people to come. I'm often asked, what are the top tips? What are the top few things that we should consider when making such a move? Do your homework. What are you wanting from this region? What visa will you require to live in this region? Because are you going to be self-sponsored by a visa, coming over with an employer, setting up a business? There's lots of different types of visas to take. So do your research, speak to the right people, speak to us. We can put you in touch with the right people. Have you got children that are going to be going to school here? What type of education system works for those? My second tip for people moving to the region is get your finances in order. Look at how you're going to fund your life in Dubai. Are you coming here to retire? Are you coming here to relax? Are you coming here as an employed individual? Dubai has many tax advantages. There's lots of reasons from a tax perspective to be here, but it doesn't mean that you don't need tax advice, because you might be leaving assets or a country or businesses behind. How are you structuring those assets? So tax advice, even though you're moving to a tax-friendly and efficient region, I would always recommend to be high on people's agendas. And again, we work with some of the global leading tax advice firms to help guide our clients through those sort of things. And thirdly, take a good look at the property market. Where do you want to live? What type of property do you want? Do you want an apartment? Do you want a townhouse? Do you want a villa? Do you want to be on the golf course? Do you want to be near the sea? Dubai has everything really to cater for all sorts of clientele and all sorts of budgets. But one of the things I do notice is that when people come here, they will often take a property somewhere and then they'll be looking to move in quick succession because they've realized that it's quite far from where they're working or at the opposite end of town from where their kids are schooling. I will just say, take your time, speak to real estate agents and have a look around lots of different areas. When people are looking at purchasing properties in Dubai, there's a number of ways that people are financing these, whether that be through a local mortgage, whether that's an outright cash payment, whether it's a blend of both. But what we are seeing there quite a lot at the moment for people that are moving here is that they're releasing equity out of UK properties. We've been helping a number of people with that, but obviously, again, there's careful planning and consideration that needs to be born from that, because if you are going to be renting out that property, are you going to be subject to rental income on it? So again, the trends are shifting as people are moving here, how they're funding them varies, and there's a variety of funding options available, but make sure you take the time to understand them all, not just from a financial point of view, what it might cost, but any potential tax sale to how you're raising those funds to fund these properties. As Dubai is a melting pot of nationalities and therefore a melting pot of cultural differences and commonalities, it's a fantastic place to be. A very welcoming community. With the right preparation, you can make your move a seamless one for you and your family, and we look forward to seeing you in Dubai.
Andrew, thank you so much. Really interesting there, learning about his Dubai experience. Delighted now to be joined by Yash Naidu to expand on that topic of relocation. Yash, your reaction to Andrew's story?
The one certainty is uncertainty. You never know what life has planned for you. So there's turns along the way and you might decide, okay, I'm going to stay or I'm going to relocate. But we've had lots of clients go to a particular jurisdiction and decide to stay, and some that get dispersed. And that creates a whole lot of complexity as well. And
before we talk about the possible pitfalls or the things that people worry about, how many people do you help do this? What is your role in this world?
Yeah. So I'm an international wealth planning specialist. I assist clients with their general financial planning. We assist them with their relocation planning. And of late, that's been something that we've seen a bit more of.
Yeah.
The relocation planning has been something that's been quite prevalent in the market. And we probably see clients at least once a week coming to talk to us about either relocating to places like Dubai or the Isle of Man or other jurisdictions for that matter as well.
And when they're thinking about this, presumably it's a mixture of concern and trepidation. If we think about the negative first, if you like, what are the things that concern people the most about taking this leap?
Well, to be told, I'm an expat myself, and I've relocated from South Africa to the Isle of Man 3 years ago. And I know all too well, the trepidation that one faces before going ahead and making the big leap and relocating with family, dogs, and all sorts. So people are a bit concerned at that particular point in time. So one of the key things that they look out for is, what is my lifestyle going to be like? Can I afford the lifestyle? Okay, do I have sufficient wealth to consider the move? And people move for different reasons. It could be a relocation to chase the sun and consider retirement, or it could be a relocation due to work commitments. And each of these have different dynamics at play, And it's navigating the financial complexity of this, which becomes probably the most daunting task. Everything else is relatively certain. I know I'm going to get a salary, or I have an idea of what's the cost of living. But until you actually get there and you look at the currency differential, you don't really know.
Yeah.
So that's where planning in advance is of paramount importance.
And one of the things we hear people talking about is what to do with their assets. If they're physically moving to a new jurisdiction, new tax regime, a new country, should they take all their assets with them or leave their assets somewhere else?
You know, that's such an important question. We get asked this question all the time. And one of the riskiest things to do is actually consider taking all your assets to this jurisdiction. What happens if you don't stay? Secondly, families get dispersed. So we've had a family in not too long ago. The parents have relocated with the kids. They decided to settle in this new jurisdiction. A few years down the line, they stayed longer than they anticipated, but now the kids decide they want to study abroad. So now this family starts to get dispersed. Now, do we move the wealth around the globe, creating unintended tax consequences and footprints all over the globe? That could be risky, and that could create some really unintended tax consequences and definitely a drag on the overall family wealth from that perspective.
So it's interesting, isn't it? Because basically you're saying you should keep your eggs in one basket rather than scattering your eggs around the globe.
But the key is where, because what you want to do is you want to put your wealth in a hub that is tax neutral, that has a long history of stability, where you have consummate professionals to help you with that wealth and help grow it. And from there, you can actually have multi-currency solutions built around it to achieve all of your different goals. And that's a really good thing to do.
And what about more practical issues? People thinking that, well, it's just a case of moving house, or as you said, moving children, moving pets, moving all those things. What are the things that you think perhaps people don't think about properly?
So one of the things is perhaps legacy planning. Okay, because as we move around the globe, you may choose, okay, I need to purchase a property. Do I buy or do I rent? Let's assume you purchase. Now you purchase a property in a particular jurisdiction, and now you've got a footprint in that particular jurisdiction. Is the plan from a legacy perspective to keep that property? Is it to pass it on to the next generation? And legacy planning is becoming a huge concern. The other thing that's on an ongoing basis that people need to look at is the lifestyle costs, and are they able to afford that standard of living, and they have loads of goals and aspirations that you want to achieve. And planning towards those goals and aspirations, those are some of the key things that I see people really concerned about.
And we mentioned Andrew's experience in Dubai. Our previous guests were mentioning Dubai, but they were saying there are plenty of other places that people are thinking about. Australia was one that was mentioned earlier that wouldn't necessarily come to everybody's mind. Where else are places that you think either people are thinking about or maybe should think about?
So interestingly, we've had a number of South Africans that have actually come to the UK. They're reconsidering their position and they're deciding to go back to South Africa now. I've had situations where clients are looking at relocating to Italy. We've had lots of situations where clients look at golden visa options as well. The likes of Portugal and other places have been on those lists. And, one of the key things is the planning around those particular moves and making sure that they seek professional advice.
And presumably what stage in your life you're at will have a big impact. If you're taking children with you who need schools, or if you're taking younger adult children who need universities, or if you're thinking about retiring. I mean, that's a completely different kettle of fish.
Oh, absolutely. And in certain jurisdictions, they don't have retirement solutions as a state pension like the UK. And in cases like that, making sure that you're planning for that and those goals that you want to try and achieve. And that's a really key thing where, getting the right advice early, makes the world of difference. It actually decides where you're going to land up during your retirement years as well. So
and
getting to that
people can be quite blinkered about retirement, either thinking, I'm not going to retire, or thinking, I'll work it out nearer the time. But actually you're saying you need really solid cash flow analysis looking forward.
Absolutely. The idea would be to go ahead and try and visualize your financial future, figure out what those milestones that are going to come up, whether it's kids' education, whether it's relocation again, whether it's holidays for that matter, or purchasing a new car, or even giving your kids a leg up in the property market as an example. And laying out all of these goals and aspirations, and a cash flow plan can help you visualize the financial future based on the assets that you have and give you the best possible chance of actually trying to achieve them. But most importantly, it's the insights that those cash flow analysis tools actually give you. For example, will I have enough money to be able to achieve all of those goals and aspirations? Or should I further fund my retirement savings? How much should I, go ahead and invest to be able to achieve some of those? So those are the key things that people start to look at as time goes by. But as you said, it's based on that lifestyle and the different stages in their life that they're at.
And we need to be practical, and we need to be quite dispassionate about these things. I mean, some people are very squeamish about talking about retirement, even more squeamish about talking about what happens after you have died, about talking to your family, about where's the money, where are the assets, how are you going to cope? And of course, one of the reasons we don't like talking about it is obvious, because it seems morbid. But actually, if you think about the situation in reverse, there you are as a family grieving, and you don't know what's going on with somebody's financial situation. That makes a very upsetting situation worse.
Absolutely. And that's an interesting comment that you just made, because people don't really know when things happen. It's unplanned if the worst should happen to someone. And what we've done recently is we've created something called My Life File. Okay? And it's a really nice document that you can put all your details in for your loved ones to find, so that they can try and assist with various things like, where are your assets? Is there a will in place? Where's the will held? Who are the executors or the solicitors that will assist? Is there a lasting power of attorney in place? These are key things that people should consider, and we've recently gone ahead and launched that, and we've seen some reasonable pickup on that, because quite a few clients have actually told us, this is fantastic, this is exactly what I needed. So it's really quite good.
And can you also put something in there about all the different passwords that somebody's going to need? That's one of the things that I'd lie awake at night thinking, I can't even keep tabs of all my passwords, let alone what would happen if my family needed to.
And this day and age, it's you really do need that. You need to note it down somewhere.
Exactly.
Safely, of course.
Safely.
Very safely.
Absolutely.
But it's absolutely important to have that.
Yeah, well, it's been great to chat, and I think a lot of food for thought about relocation, but also about sensible planning and where to get the advice, and how to have your hand held if you make all those important decisions. Thank you so much for chatting to us. Well, for those of you watching from our virtual event platform today, you'll find a link to the Life File that we've just been discussing, along with a few other links that relate to today's show. But don't rush off to check them out just yet. There are still plenty more interesting topics to come. Do remember, if you have any questions for our live guests, send them in via the chat section and stay with us for the round table at the end. We want to get through as many of those questions as possible. Now we're going to move on from property and relocation to investments, and to share some insight into that world, I'm going to pass you over to Portfolio Manager Marushi Agarwal for an update from the Nedbank Private Wealth London office.
Hi everyone. There is a lot happening in the markets and within our portfolios. But today I'll focus on a few key areas where we're finding interesting opportunities. The US has been a standout performer globally, with its economy showing remarkable resilience, defying widespread recession fears and continuing to grow. In contrast, other regions, such as the UK, have faced slower growth and more persistent challenges, making the US a key area of focus for us. The better economic momentum and higher wages has meant while inflation has come under control, progress has slowed and remains sticky. This has led to a softening of rate cut expectations. At the start of 2024, the market anticipated 6 rate cuts, but we ended the year with just 2. Despite this, the strong economy and the fact that central banks finally began cutting rates after 2 years of the most aggressive hikes in decades brought some optimism. This helped drive the S&P 500, which tracks the largest companies in the US, to another incredible year, with continuous headlines of all-time highs. But of course, AI was a major driver. Much of the excitement came from just 7 names, the Magnificent 7 tech stocks. With the sorts of valuations that have been pushed, these companies still need to beat market expectations and grow at the heady rates that have been. But is that actually possible? The market volatility we've seen of late In particular, the fall we've seen in Nvidia demonstrates what a knife edge the stock can be on when trading at such a high multiple. Now, while it's been thrilling to watch, we have taken a disciplined approach, locking in profits and trimming exposure to these large cap names. Instead, we've been shifting our focus to areas with more attractive valuations and strong growth potential. This includes the equally weighted S&P 500 index, which gives each company in the S&P 500 the same importance, rather than larger companies having more weight. This provides a more balanced and diversified exposure across all sectors and greater access to mid and smaller cap companies. By broadening our exposure, we can benefit from earnings growth beyond the largest firms. We're also particularly excited about US small caps, which we've mentioned before. They're closely tied to the domestic economy, consumer confidence is high, and they continue to look strong. And of course, we can't ignore Trump. While he's created plenty of noise, his core agenda is clear: a pro-business focus. Tax cuts, deregulation, and protective tariffs are expected to give domestic-focused businesses a meaningful boost, reinforcing our positive outlook on small caps. To sum up, we remain cautiously optimistic about equities. We're seeing opportunities as profit growth spreads beyond just a few big companies to a wider range of industries that can benefit from the strong US economy and healthy consumer spending. Turning to fixed income, volatile yields have been a defining feature of the past year. As investors have adjusted to the idea that rate cuts may take longer to materialize, yields have risen. And now, the potential impact of Trump's tariffs and fiscal stimulus is further pushing yields higher, putting pressure on bond prices. Remember, as yields rise, bond prices fall because future cash flows are discounted at a higher rate. And we've taken advantage of this dynamic, steadily increasing our exposure to bonds over the past year at these attractive valuations. Now, not only do these bonds offer attractive income, but they also stand to gain from capital appreciation as central banks lower rates, unlike cash, where rates fall and all you're getting is a lower income. Within fixed income, we've also been selective. We've been enjoying taking on more credit risk by adding a new holding in US high-yield bonds. These carry a higher risk of default compared to investment-grade bonds, which is why they offer higher yields to compensate for the increased risk. However, in today's low default environment with stable economic activity and fading recession fears in the US, the risk-reward profile is particularly appealing. Beyond returns, fixed income remains a cornerstone for diversification and protection in portfolios, offering resilience during market fluctuations and helping to balance risks. To wrap things up, despite the strong growth we've seen in markets, much of which is fundamentally justified, we remain cautiously optimistic. While the resilience of the US economy provides reasons to be encouraged, we're staying disciplined and selective in identifying opportunities. By focusing on areas with attractive valuations, strong fundamentals, and diversified growth potential, we aim to stay positioned for long-term value.
Well, if after that update from Madhushree, you're wondering what the future looks like for investment markets, well, you're in luck. Joining me now is Chief Investment Officer Tom Caddick. Tom, let's talk markets. Obviously, we've had so many warnings of volatility in the markets, and we've seen a lot of volatility. How are things looking right now?
I think Madhushree summed it up beautifully there. We're cautiously optimistic on the markets. There has been a lot of noise, which is another way of saying volatility, of course. There's been a lot of noise, but actually they're behaving reasonably well. We've got, global markets. If we take a 30,000-foot look at things, markets are at near-term highs. The global economy looks reasonably robust and is supportive of that. If you start to narrow it down into some of the sectors, yes, we've had a lot of noise. And, I'm sure we'll talk about that shortly. But broadly speaking, okay.
All right, so that's quite reassuring. Let's move on to Trump, obviously not unconnected to this issue. Obviously, once people got their heads around the fact he was coming back to the White House, what has the market reaction been like?
Well, I mean, we spoke at a client event just going into the election, and our core message from an investment standpoint was politics doesn't matter when it comes to the markets. The economy does, but it does create noise, and the noise has been fairly deafening since Trump took over, and in fact, even in the build-up to, pre-inauguration. So there's been a lot of noise. We've seen a lot of market volatility as markets, particularly at a sector level, start to try to, I think, adjust to some of the policies or some of the decisions that have been made, at times unexpectedly so. So it's created a lot of noise, but actually we're seeing that all feed through again. We're seeing that actually it's the economy that really matters.
And of course, Trump likes to, tell us all that he's the ultimate deal maker, that he's going to, change the, as you quite rightly said, politics doesn't matter, but the economy does matter. But, rather like this government, he's putting all his chips on the economy and on growth and on jobs. But he's also upsetting a lot of people with his talk about tariffs. How unnerving is that? Or do you think that there is more bark than bite?
I would err to the latter, but tariffs, some of the concern there with tariffs is that it does change geopolitical trade and global trade generally. We've already seen this with Mexico. We've seen it to a certain extent with Canada, where some pretty punchy tariffs get thrown on the table, short deadline, and then moved at the last minute. But it does have an impact, and there is also concern that tariffs are ultimately inflationary. So that has changed some of the perceptions of the amount of room that central banks have got to reduce rates if we're starting to see some inflationary impulses coming through.
I think it's been fascinating this week that we are seeing quite a lot of people murmuring about the possibility of a US-UK trade deal, whether or not it's worth the paper it's written on, whether or not it includes, agriculture and so on. All that's very early days. But that level of sort of optimism creeping into the general chit-chat this week, I've personally found very interesting. And the thought of a Starmer-Trump trade deal, sort of hilarious.
Who would have thought
Who'd have
that?
thunk it?
Yeah, exactly. It's particularly in the build-up to the election, and with some of the comments that have come through from, say, the likes of Musk, who's busy whispering in the ear of the president. So, yes, we're seeing a lot of change. I mean, clearly at the same time, there's talks coming out of the US and the Trump administration of imposing tariffs on the EU. So that would be a very interesting thing to see. But I think you don't want to put too much emphasis on the rhetoric. We have to actually see the action and how that plays out.
I want to talk about UK specifically in just a minute. We just talked about Starmer. I want to talk about Rachel Reeves in just a minute. But before we move on from America, talked about Trump and, of course, the visions of all the tech bros lining up, behind him, really getting in bed with Trump. That's been pretty surprising in the last few months. What sort of market impact is that having?
I don't think particularly dramatic. I mean, clearly there was a bump in terms of, say, Musk-affiliated companies, the likes of Tesla and the like. I think it's just people trying to reposition for a new administration. And if ever there was someone being sensible, probably, and if ever there was somebody in charge who would respond to that, you would probably argue it is a Trump character.
And talking of tech, obviously we've seen a lot of issues around AI. We saw the NVIDIA share price absolutely tank. It did come back a bit. What's the implication of that? Is that something we should all be holding our breath about, the threat of sort of Chinese AI and so on?
I think it's more about the likes of NVIDIA trading at the sort of multiples they were trading at. So the sort of valuations that they're on as a stock, it's almost pricing in perfection. So, those high growth rates are going to continue going forward. And you get to the point where the market expects them to continue to beat expectations. And they had been doing that. And now you have a situation where there is a external threat of a cheaper methodology, a cheaper route through, that maybe doesn't rely on those sort of super grade chips that NVIDIA produce. And that puts that whole theory into a risk. And that is just really just sort of classic market behavior. Nothing more, nothing less.
So nothing to worry about.
I don't think any concern.
Overly to worry about. All right, let's come back domestic. UK. What's your analysis of Rachel Reeves? We've mentioned it already. She keeps saying she's all about growth, but some of the policies that she's put in place have definitely scared the horses.
Yeah. If I was a teacher, I'd be giving her a mark of probably 3 out of 10, I think, on the job so far. I think it was very poorly managed. We can all see that. It's very easy for me to comment from the sidelines, but it's one thing to say it's a growth budget, but it's another thing to actually deliver a growth budget. And unfortunately, what we saw was talking down the economy going into that sort of phase in the build up to the autumn statement, and then delivering a budget that was anything but a growth budget. And in fact, is arguably more of an inflationary budget. And that's the concern, pinning your hopes onto a few very, very long-term projects like I know the Heathrow plans weren't announced at the budget, but that will be years out before it even starts to have an impact on the economy. So I think it's been a poor start that we've seen from Reeves and the government as a whole. I think they've struggled to find their feet and actually try to deliver.
Final and very unfair question. Any top tips you can give us? Any real market opportunities that you think are worth a proper look at?
So, our view at the moment, I know Madhushree was just touching on a few areas such as sort of mid and small cap. We do like equities and we do like fixed income. They're now behaving themselves and coexisting as we would want in portfolios, and think global.
Right. Think big, think global. Tom, thank you very much. I'm not getting shot of you quite yet because I know you're going to join us in a little bit for the round table, but thank you so much for giving us your opinion on the global markets and domestic as well. As I just mentioned, Tom will be staying for the round table discussion. So keep those questions coming because we don't want this conversation to be a one-way process from us talking to you. We want to hear back from you. So use the chat function and let us know what questions you'd like all our experts to answer, whether you've got questions about relocation, whether you've got questions about markets, whether you've got questions about property or healthcare. I'm delighted now to be joined by Victoria Aspinall from Solace Health, who specialise in personalised health solutions designed to enhance well-being and longevity. Victoria, thank you so much for joining us this afternoon. Of course, we've been talking about the health of your bank balance, if you like, the health of your investments, the health of your property portfolio. But all of that is kind of redundant if you're not looking after number one and looking after the health of yourself and your family. Tell us a little bit about what you do and what you're seeing in this area. What's changing?
Sure. Well, thank you for having me. Solace is pioneering a totally new approach to healthcare and wellness. So headquartered in London, but with very much a global network of clients and top specialists. So we integrate private GP with longevity practices and medical concierge. So really a one-stop shop for all of your healthcare needs wherever you are.
And this is available throughout the UK?
It's available at a global scale. So we have a lot of international clients. About 80% of our client base is international. Everyone's moving around. Nobody's based in London full time anymore, let's say. But we really manage all of their medical needs there and health insurance claims. We look after their families, we look after a lot of corporates and look at wellness in the workplace. And it's really looking at preventative healthcare merged with reactive healthcare. So if you've got an issue, say you're skiing in Courchevel and you break your leg or fall off a pony playing polo, we can manage that, but we can also optimize your health in the long term and really make you live a longer, healthier life.
And we were talking about tech bros earlier, but this is something that seems to a UK audience that has sort of, this idea of longevity and preventative healthcare does seem like quite a sort of American concept or a Californian concept, but actually it's becoming quite mainstream now.
Yeah, true. So, I'm sure a lot of people have seen the documentary on Netflix with Brian Johnson, who's biohacking his way to live his biological age and much younger. So I think there's been some good press and some negative press. But I think the whole idea of health is wealth is huge and it's fundamental. So looking after your assets, your investments, if you are not healthy yourself and your children are not healthy, then there's no point really looking forward to the future and how your investments cope. So the market, the wellness market alone is 6.3 trillion. It's huge. It's bigger than the pharmaceutical market, and it's growing at 10% per year. And we just did a recent study with all our high net worths, and it was phenomenal. So they would give up 48% of their wealth just to live an extra 10 healthy years. So everybody is adapting to this new wave of preventative healthcare. What can I do in my day-to-day? How do I optimize my sleep? How do I address my mental health? How do I manage my stress, my resilience? And all of this combined with nutrition, with training, with functional health, your supplement routine, it stops you getting sick. So it's.
But I suppose it also provides its own pitfalls of making sure that, if as you were saying, and I completely believe it, that there is this huge market and desire for people to live, healthier, longer lives. Then there's also the opportunity to buy the wrong product, to invest in the wrong, gadget, gizmo, promise, whatever it might be. So I'm guessing we all need, we need brokers to help us with the investments, and we need people to tell us what to spend money on and what not to waste money on.
So Solace is the family office of health. This is exactly why we founded the company, which is really there is so much noise on the market. It's to navigate with the top international doctors, helping you navigate this whole world of longevity and how to put it in perspective. So you're not chasing the fads. You're not looking at, your biohacking routines. It's underpinned by top medical advice from Harvard, from Oxford. It's the leaders of the pack advising our clients and making them feel they're in safe hands.
And what are the biggest trends in the area?
Yeah, so huge trends in stress management and resilience, a shift into nervous systems, how you manage your nervous system, so going to therapeutics, somatic therapies, breath work, the whole holistic side is taking off, and advising that and looking at it through a medical lens and looking at your ROIs, your KPIs, and coming back in your biomarkers is phenomenal. Stem cells, so regenerative care, stem cells is not legal to do in the UK, but at Solace we have places we send our clients where it is legal, and that's phenomenal for living longer.
What sort of stem cell stuff are you talking about?
Stem cells is a very confusing topic, but we work with stem cells from bone marrow. So traditionally stem cell therapy would be to, say you were due a knee transplant but you wanted to delay it. You can inject it at a local site and it will help repair your knee. Now the beauty of stem cell and exosomes is that actually it repairs all your cells in the body. So it's not just your knee you're sorting out, it's your skin quality, it's your brain health. Alzheimer's, it's proven that actually it's a cellular repair mechanism for all of your organs.
And those are all the things that perhaps we should be thinking about or we get excited about. What are the misconceptions about healthcare?
Yeah, so the misconceptions is, I think the top one I'd say is around DNA, that it's in your DNA, you're going to get this. So I've done my DNA testing, I've got ApoE4 dual strand gene, which means I've got an extraordinary percentage to get Alzheimer's. I'm very likely to get Alzheimer's. But it's really 80% of it is lifestyle. So it's about, can you manage your stress? Can you manage your sleep? Sleep is hugely important. And then looking at, as you said, Daisy, the supplement market is huge. It's not, less is better. People go and they stack all the supplements. They're advised by many different people. It's really about personalizing your supplement routine and doing less. Less is more.
And are there any interesting international comparisons about, obviously we often see the UK lags certain other countries and so on, but I'm guessing once you get to, the wealthier populations, the high net wealth populations, then I wonder whether there are any differences between the health of those nations. Because as we know, income does have a big impact on health.
Yeah, I think there's a difference in terms of how people spend on healthcare. So obviously Americans are much more used in terms of how they spend on health, and they're much more aware of their health given the insurance policies over there. But I think it's very much the international, I'd say our UK clients are less forward-thinking in health, for sure, than some of our international clients.
That's interesting. Yeah. Why do you think that is? Just because we're, as you say, we're not used to
stoic, and they don't fix it until it goes wrong. They're not in that forward-thinking. Let's avoid the collateral damage of getting very sick or getting cancer. 70% of cancers can be prevented if you actually change to an anti-inflammatory diet and you do a cancer test once a year. So they're less proactive in how they think about it.
Yes, I guess because so many Americans have an insurance policy that says that they should be getting regular checks and tests for all these things, that they're just in that mindset to go and get tested all the time, that perhaps Brits aren't.
Yeah, and I think the NHS, which is wonderful, it's struggled for so many years. I think the Brits are so kind of down in the dumps about healthcare, they kind of brush it out the way, and they don't like talking about it. They don't like talking about it.
Yeah. Well, I hope that our discussion today has perhaps stimulated some discussion about that, because, as you said, prevention is so important. And with the ageing demographic, with most of us wanting or needing to work much, much later, we're not going to be able to do that unless we look after our health. So it's beneficial for everybody. Victoria, thank you so much. I know you're going to join me at our roundtable discussion. Victoria and I are going to join our other guests. But before we do that, I just want to remind you one last time to get any questions you have for the team, and we will cover as many of them as we can in the next session. Victoria, I know you're going to take a seat here next to Tom, and I want to thank everybody for hanging around and staying with us. We've covered a lot of ground over the past 50 minutes or so, both people's individual wealth planning, relocation, health and wellness. I thought that was really, really interesting, particularly why Brits maybe aren't as on the ball as the rest. We've talked about AI. I just wonder if maybe, Yash, I might start with you. Are there things that we've been discussing today that you think, we just talked about something that we think Brits are bad at, that we're a bit too stiff upper lip, that we don't ask for help with certain issues. Are there things that Brits are good at, when it comes to investments and relocation, that perhaps the rest of the world can learn from?
Quite often I see we tend to be quite focused on tax-related matters and that type of thing. But perhaps to sort of rephrase the question a bit is, we actually see mortality tables show that people are living longer broadly speaking, and we want to put them in the best possible position where their wealth actually outlives them and not the other way around. Yeah. Okay, so it's also that part of the conversation in terms of ensuring that we are able to support them as they live longer, but you also want to live longer healthily. I think that's the key thing as well.
Yeah. Joe, we've had a question in. Again, we were talking about property market earlier, and I was asking Katie about hotspots in the UK. But are there global hotspots that people either which present great bargain potential, or if you're selling, which are really going up? Either Chirag or Katie.
We talk about relocation here. If we talk about relocation, the Middle East is definitely a hotspot. If we're talking about where we're seeing a influx of individuals come from to purchase in the UK, again, the Middle East, the US over the last few years, and the Far East. We're seeing a lot of individuals from the Far East either relocating back to the UK or purchasing in the UK.
I think it kind of depends on, you have to think about what is that individual looking for, what are their priorities, are they in it for the short term or the long term? And if you were to look at what our world, our global index shows that Dubai is one of the standout locations that is seeing incredibly strong capital value growth and indeed rental growth. So 7% sales growth over the last year. I think it's something like 24% rental growth, which is astronomical. Yeah. But obviously that's not going to continue year on year on year. So if you are an investor that's looking for a really strong yield, you need to think about a whole host of other things, not just the figures of today. So thinking about where those sort of slightly more longer term opportunities might be.
Yeah. Tom, I just had a question in for you. Thank you so much for your questions. Will crypto be considered as an option for Nedbank portfolios?
The crypto question.
The crypto question
creeps in again, and I can see why. I mean, it gathers a lot of interest in the press. Obviously, now with the Trump administration pushing that, and I would say that actually my position on crypto has probably evolved over time. We've seen it shift into the mainstream.
Evolved from a cynical to
very
less
cynical,
than cynical.
Extremely cynical view previously. We've seen it shift to the mainstream. I think regulation has to catch up though. And that's, we are a regulated entity, and regulation needs to evolve around that to make it readily available, but also available for us to be able to take that on as a position before really we can talk about that sensibly. You could see a time in the future that becomes a position in portfolios, maybe alongside general currency. Anyway, it isn't a currency in and of itself. We should always remember that. It doesn't have the backing of a state or a nation. But I think, yes, position has evolved. We're not there yet.
Okay, we've got an interesting question for Yash. This viewer says, if I relocated to a country with no national pension system, we did mention pensions, how can I make sure I can retire there comfortably?
Well, the starting point is save. Sounds simple enough.
It might not be the answer you want to hear.
But that's the starting point. And then the next thing is you want to be able to go ahead and get some advice, and proper advice in terms of what are the goals and aspirations you're trying to achieve during your retirement years? When are you planning to retire? How much do you need to have invested at that particular point to live comfortably for the rest of your life? And to be able to answer a lot of those questions and to be able to do that, you usually want to sit with a wealth planner who's going to review your holistic financial position and give you some guidance in terms of what you could do now to try and improve that end goal of a successful retirement.
Okay, very good. Question for Katie and Chirag. What's the risk around mortgage rates at the moment? Very pertinent for today.
Yeah, I'll touch on that. Earlier I mentioned that the bank's MPC were meeting. They voted 7-2 in favour. There's been a base rate cut just half an hour or so ago, so rates are down. But that doesn't necessarily mean there's a knock-on effect into mortgage rates. Mortgage rates are twofold. You've got the tracker rate, great for those that are on a tracker, they're going to see their payments decrease, but that's only half the mortgage holders. The other half are on fixed rates. Now, fixed rates are not necessarily just driven by Bank of England base rates, and there's over 50% of mortgage holders who are on fixed rates at record low levels and are coming up to the end of their fixed rates over the next year and a half or 2 years. So it's going to take time to infiltrate into the mortgage market, but it adds sentiment. These base rate decreases does add sentiment into the mortgage market, which then has a knock-on effect into mortgage rates eventually. So it's looking better.
Yeah, better than nothing, but not the sort of knight in shining armour that we might all want. Katie, I'll get you to react to that as well. We've also had a question specifically for you asking what impact is predicted regarding the investment residential market because of the new Renters' Rights Bill, which of course has been going through Parliament and has caused a lot of fuss.
Yeah. Shall I pick up on mortgage rates first? And I think that is really interesting. And obviously for our mainstream London and indeed UK forecasts, the mortgage rates and the base rate forecast, they're an incredibly important part of the fundamentals that feed into that model. It's very sensitive. So even though we're talking about, a 0.25 increase, it's all heading in the right direction. And actually by the end of this year, if we are going to see what Oxford Economics expect us to see, which are our forecasters of choice, it's going to be, we're going to be at 3.75 by the end of the year. That's a more significant impact. So the pace and timing of these cuts is incredibly important for the mainstream markets. But whilst we've talked about the different types of mortgages, actually in prime central London we find that only of our experience, only around 35% of people are using mortgage debt. So it is predominantly cash buyers. They may choose to leverage for many other reasons as well, but these people aren't as tied by affordability constraints as the rest of the market. So it does have different impacts and it's not so heavily impacted by base rates.
And obviously going to renters' rights, that is a piece of legislation that is aimed, as the name suggests, to look after renters. But what would the impact be on landlords and on the property market? Exactly,
and I'm really pleased that's come up because it's such an important part at the moment, and a lot of landlords are feeling the pinch, not only from that, but also of the higher cost of debt. With all of the changes to regulation, it hasn't been a very a landlord-friendly market for a while now. And I'll just remind you what the changes are. There's some some changes to something called Section 21, which means that landlords need a reason to get that land. It's the no fault evictions. They need to give a legitimate reason to get that tenant out. And from the tenant's perspective, they can challenge any rental increases. So that landlord needs to be absolutely certain that they've got that rent right and that they can justify that rent, frankly, before these changes come in, because any further increases will be could be heavily contested, and there's a length of time that will then go into to be challenged. It will have to be proven. How this all happens, it's still yet to be determined. So the impact on the market is that we're seeing landlords already leaving the market. Some landlords are just thinking, this is a bit too complicated and a bit too risky. And then that means that we've seen astronomical levels of rental growth over the last couple of years in this sort of post-pandemic market, where we saw incredibly strong levels of demand and this weakening supply. And that is really only likely to continue, and that's going to, even though we started to see demand sort of stabilise a bit, because of this lack of supply, we're not likely to see that adjustment come through in rent. So rental growth, our forecast of for around 2.5% this year in London.
Wow. Well, to any of us with teenage kids or thinking about how they're going, where they're going to live or how they're going to live, this is nothing but bad news. Tom, we've got a question just come in. Should we be rethinking our portfolios due to global conflicts?
Again, I think it does come down to economies rather than necessarily geopolitics, which does create noise. I accept that fully, and we've seen that in markets so far. Things like tariffs as well create issues with the things we're seeing in the Middle East. Absolutely can have a knock-on effect, as harsh and harsh-headed as it can sound. The knock-on effect on things like oil price or the knock-on effect to gold can all have an impact. But broadly speaking, it's about the economy and thinking global. So I go back to what I was saying before. I don't think it's about a rethink. Obviously, one has to be sensitive to it, but actually taking on that global view and being sensitive to the economic direction is the key.
Yeah. Victoria, final question to you. We've been talking obviously about investing in property, investing in relocation, investing in markets and so on. And we were talking to you about investing in your health. But as far as healthcare as an investment, is that something that you're seeing a change in people's, either in markets or in individuals' appetite?
In terms of investing in the industry themselves, in terms of, there's a lot going on. There's a lot of in AI and tech coming through with healthcare investments. The market is highly fragmented at the moment. There needs to be a lot of consolidation plays.
From too many startups or too many nations, or where does the fragmentation come from?
A lot of startups, because it's such a booming industry. Yeah. So you'd naturally get your fragmentation. You'd naturally get your kind of the whole longevity you see needs to be amalgamated and consolidated, and a lot of lone wolf players. So I think a lot of people are going into the market because it's so attractive and it's only going to keep growing. But you're going to get some big industry players buying stuff up and consolidating. Yeah.
Very, very interesting and fascinating. Thank you so much for talking to us earlier about those trends. And it is like any other investment. You need somebody holding your hand and telling you, don't waste your money on that, but do. But of course, with your health, even more important, one could say, than other elements. I just want to say a very big thank you to all of us. I've thoroughly enjoyed myself. Fascinating discussions today. And of course, I want to say thank you for sending your questions and for joining us today. Some really interesting questions. But I'm afraid all good things must come to an end, and that is all we've got time for today. We will see you next time on the Nedbank Private Wealth Investments and Wealth Insights report. But for now, thank you for joining us. Happy investing. Bye-bye.